so, we are still talking about insurance this month, in our finance, insurance, and real estate conversation. So, how do you want to kick it off, Toby? I'm gonna let you start it, the conversation.
Most of the state of the insurance industry hasn't changed a whole lot in the fact that, unfortunately, rates are still rising. That's due to a lot more storms that are coming through, and that could be, a lot of it here in North Texas is the hailstorms.
At 1 to 9.
Possibility. So I'm hoping chances tonight, yes, and we're entering hail season now, and I'm hoping that we get through hail season and, we don't have as bad of storms as we did last year, previous year, and that will allow things to reset a little bit. Still not gonna say things are gonna open up that quickly. Things don't open up quickly in the insurance market. But if we can get through hail season, not have to pay out a lot of claims, that will help kind of recoup their reserves and for the carriers. So right now, a lot of carriers are upside down. They're paying out more than they're bringing in, even though rates are rising. Claims are just expensive. Cars are expensive. There's no cheap accidents anymore. Even though the frequency may be down a little bit, some studies show the cost of accidents, because people are driving faster. So personal injuries are higher. Lawyers are getting involved from the start. So litigation is a lot more stuff goes into litigation, which is, again, it drives up the cost of everything. So you kind of got all that stuff going on. So, but I think the baseline, if we can get through a hail season where it's not severe, that will help kind of put stuff back on track right now.
Now, does that mean that if we get through this hail season, let's say with just one sort of minor storm, does that mean that we could expect rates to go down? Or does that just mean our rates won't go up? Or does that mean they just won't go up as much?
It's starting to stabilize. We saw the major rate increases last year. If we get through another hailstorm with hypothetically one storm, I don't see your rates going down, but they will stabilize more. So
if you were offered a 6-month renewal at the same rate, you would take it right now, right? So
absolutely.
So yeah, I agree with Toby there. They likely won't go down, but anything is a benefit at this point. So having the same rate would be fantastic.
yes, because everybody's used to the double digit. I shouldn't say used to, but last year a lot of people had double digit rate increases, and it's hard. There's a lot of people even pulled out of the market, which makes it even that much worse.
I was about to ask you about that, because I know you talked about that before. Is that still happening? Are we still seeing carriers pulling out?
I haven't seen any more carriers pull out recently, but the restrictions are still there. So you really got to fit that perfect mold.
When you say pull out, are you talking about pulling out of the industry altogether, pulling out of the state of Texas, pulling out, like, what are they?
Kind of all the above. Some of them have quit writing business. So from a small scale, quit writing business in like the 5 immediate counties of North Texas. Others have pulled out of the state altogether. Some of them are no longer around, period. Seems like a lot of them are even raising deductibles, trying to catch that happy balance of, I'm going to increase the premium this much, but I'm also going to increase the deductible. So that way, if you do have a hailstorm or something, a claim go on, it costs you more out of pocket.
So I understand that whenever it comes to insurance, California and Florida are two of the more dangerous areas to be in. If they pull out of Texas, which might have some risk there, are they pulling out entirely, or where does Texas rank on that scale?
Texas is kind of right in there. So you got California, Florida, Louisiana's kind of on the cuff of that as well. And then Texas is not far behind them at all. Just because of the wildfires we have here, the hailstorms that we have here, it's a pretty high risk. And we're so dense. Going back to the 5 counties here in North Texas, we're such a dense population that if you have a hailstorm, it may take out, several thousand homes. Where if you go a county or two to the south or west,
It's 100 acres of pop.
Okay. Yes.
Gotcha.
Yeah.
I know that one of the rental homes that I own recently, well, this is probably 3 or 4 months ago, I got a notice that my carrier was pulling out of Texas. And so obviously we're not gonna renew. So then my insurance person goes out and finds me like the next best deal, and it's like twice as much.
Yeah.
So my cost and of course, this isn't my homestead, so I'll be clear about that, but still, it's, the insurance on the house, the landlord insurance doubled just because the previous carrier pulled out of the
Right.
state.
It leaves, like anything else in business, the more competition you have, the better it is for everybody. And when you've got people pulling out, that leaves the carriers that are still in the industry, they got a little bit more leverage to be able to drive that
Yeah.
cost up. Unfortunately, that's, all industries, but
Yeah,
insurance is definitely one of them. And pulling out a certain risk, each carrier, has their own restrictions. And some carriers won't allow, homes over a certain value. So they topped it out around 650, I think, so they won't insure anything above 650. There's other carriers, they won't allow them to write any homes in certain counties. They've got their share of market risk in that area. They're like, if a hailstorm comes to, X county and hits hard, that's a huge payout for us. So we're gonna diversify. We're not gonna write business in this particular county, but we don't have a whole lot of market share over there, so we'll allow you to write business in that county. Just trying to spread it out, spread out their risk there, so.
So what else is going on in the insurance industry? Since you have all of this change, how is the insurance industry adapting to that?
So what everybody's gonna see is the increase in, premiums, deductibles are going up. We're kind of scattered in that, we still have some carriers that will do 1%, some 2%, and one carrier 1 to 3% on the residential side. Commercial side, it can be more than that, and it's a lot of times, but, separate animal, commercial and personal lines are always separate animals there. So it seems like that's one thing that's happened. There's also a lot of mergers, acquisitions going on, so, we're always trying to keep an eye out on that, because again, if you have an acquisition or a merger, that's almost like somebody pulling out. That's one less carrier there to take some of that market share. So it's really limiting. I would say you're probably at least a year to 18 months before, even best case scenario, we kind of see things stabilizing a little bit. So it's just gonna be a rocky road.
So, as I realize that health insurance is way different, totally different ballgame, but I'm gonna use it as a comparison for a quick second, if that's okay. And because I'm privately insured and self-employed person or whatever, we look really closely at those types of rates, right? So there's a lot of people who will go to sort of a catastrophe only type of catastrophic policy, like I'm gonna pay a lower monthly premium and have a high deductible and whatever, because insurance has gotten so expensive, right?
Yes.
So in homeowners insurance and auto and all that, when you go to a 2% deductible and the rates are going up, et cetera, like if I look at what I'm paying for my insurance and plus the deductible versus what it costs to pay cash for a roof,
Mhm.
or one of the things that you commonly would claim on your homeowner's insurance policy, where are we in the realm of people going to catastrophic only type of policy?
Well, aren't they getting ready to take the whole roof thing out anymore, which is really what your insurance covers?
Right, so,
The interesting thing, and I don't mean, I asked a question and I'm gonna keep talking. The interesting thing about selling real estate, and we've seen as some of these more corporate type of companies have come into our
Yeah.
market, is when we say, the house needs a new roof or whatever, and they predominantly have done business in like Arizona, they're like, what do you mean it needs a new roof? They don't, in other states and places where they don't get the type of storm damage that we do, people have roofs on their house for 30 years, and they know that at the end of its life, they have to replace it. Like, we're one of the few places in the country where insurance companies replace roofs. Would you agree with that you've seen the
Yeah.
same? So, sorry, so that was just to answer your, I mean, yeah, most of our
So
insurance policies.
if you take that out,
What is insurance covering and when do you get to a catastrophic only type of?
and is that an option?
It is, yeah,
So there's a lot to unpack there.
sorry.
So when you think about raising your deductible, yes, it can lower your premium. What we've seen as we try to help everybody the best we can, look at it multiple different ways. And it seems like on a lot of them, if you do increase your deductible that 1%, you know, you go up 1%, the cost savings on it isn't dramatic. But then you look at what 1% would do to a deductible, and you know, it could be $10,000, $12,000, whatever.
Right.
You're like, so I'm saving a couple $100 a month, but when that hailstorm, and around here, it's a matter of when that hailstorm comes in, it's gonna cost me 10 grand more in deductible. So although you get the cheaper premium, at the end of the day, it doesn't really, the savings doesn't offset what could happen.
Well, but some of the carriers are, they're just going to higher deductibles anyway, so in some
For sure.
situations, you don't have a choice.
Yeah, yes. Like I said, we still have a couple of carriers are at 1%, several of them are at 2%, and then we've got one carrier at 3%, which basically with them jumping to 3%, that's basically them saying, we don't really want your business, but if you come to us, we're gonna make some money, but we really don't want the
Right.
businesses. So they haven't pulled out of the market technically, but
Price themselves out.
they kind of price themselves where they're not gonna get
Why more companies didn't do that, take that strategy rather than pulling out altogether? Why didn't more companies do that?
It could be their reserves that they have in the bank, and knowing that we're one hailstorm away from totally, you know,
Bankrupting them?
Yeah.
Is there a roofing product that would lower your deductible? So in the sense that there is a higher quality shingle or maybe an alternative that would make it to where your claims are less likely to happen?
so there is a high impact shingle that's out there. The cost on it is
Substantial.
substantial.
It's
Yeah, I
kind
had-
of like, why can't they cure some of these diseases? Think about it,
With,
it's a money game.
I have a client that
You
has,
affect,
has one that bought, I sold a house last year to somebody, and a roof that would normally cost like $30,000 costs $65,000 in this particular house.
So it would take 3 deductibles for to cover that difference is what we're saying, or
Yeah.
maybe not, I don't know.
But the shingle supposedly, or it's not even really shingle, I forget what they call it, but it's. the-
is it
the-
like that metal?
Yeah, it's like,
It's
it's
like a
almost like,
heavy
I
duty.
mean,
I've
it
got
looks like,
several in my neighborhood.
it looks like a slate roof.
Yeah, it
I mean, you
does.
would look at it and not know it's something
But it's
different
like a,
until you get right up to it. Yeah,
But what we're seeing, unfortunately, for the 30,000 in additional cost that your homeowner put out to have that roof, you're not seeing those kind of savings.
yeah,
On
in
the
the
inch.
inch.
Yeah.
So
it
it's,
doesn't matter.
they saved a little bit, but I don't remember, but
Yeah.
I agree.
it's not gonna pay $30,000 extra for that.
You'd almost have to have it mandated that in the roofing industry that you change the product
Yeah.
before it would affect insurance. But then now you've hurt the insurance industry. So there's gonna be a lobbyist somewhere that will fight that.
On both sides.
On both sides, that's right. And that's where it comes down to. It's always a money issue. Yep, always.
Yeah.
Well, going back to what you said on the roofs.
Never comes.
And it's gonna be changing that way, and we're starting to see that where if your roof is over X number of years old, you know, 12, 15 years old, then it starts becoming a roof schedule policy or like an ACV policy. So you're gonna have skin in the game. If you went 15 years and got 15 years worth of life out of that, and a hailstorm comes in, they're not gonna put a brand new one on. You've got use out of that first 15 years. So a lot of them are gonna start going to that. And the way I see it, that's really the only way to kind of save what's happening. And because if you take a house and you put a $50,000 roof on it and it gets a new one every 7 or 8 years, but you're only paying $5,000 in premium,
Mhm.
that math doesn't add up. And I mean, none of us like to pay premium. I freaked out when I got my own. But that math just doesn't work. An insurance company can't keep paying for a $50,000 roof every 7 or 8 years.
But you know, I still wonder what happens when, I mean, because it's not our choice to have insurance. We don't get a choice.
What do
Man,
you do if you pay cash for your house?
True.
well, but still,
True.
or if you own your,
If you own it
Yeah.
outright, yeah, if there's no mortgage on it, you have a choice.
yeah, but you're still,
That
to a
is
certain
not
degree.
big advice.
Yeah. I'm not saying I recommend it, I'm saying.
Said Stephanie.
Yeah.
We have no but what happens in the game of insurance? You know, and I guess that's the bigger thing, is that where does this go? Where does it head? Because when it becomes to the point where you can't afford it, and you look at all your insurances, I mean, that's where the majority of our money goes, is to insurance, all different kinds of insurance that you gotta have.
Yep.
So when that becomes astronomical, what's the end game?
What do you mean when it becomes?
Yeah.
Well, it can,
I mean,
it can
it's-
get
It's
more.
already
It could be,
Yeah.
I think it can go higher.
Sure.
And what does that do? Does that push people then to other options, renting? Does it push people to, actually no health insurance?
Well,
Or,
what did Lee just tell us about his, as a landlord, insurance policy, rents are gonna go up too, so renting, renting doesn't even solve the problem, because now you're paying your landlord's higher insurance bill.
but if you have that mortgage, you have the interest on that. There's so many more expenses.
Right.
It's definitely more expensive to own a home than it is to rent. If you look at everything in totality. But so where does it go?
Well, I think that it's a bigger question, and this will really open up a big box of worms. But it's not, your insurance is rising, no doubt about that. It's again expensive. We have these conversations all the time, and there's no easy way to answer that. But you've got your insurance that's going up $2,000 or $3,000 a year. You got your property taxes that are jumping. Unfortunately, right here in our area, and it goes back to the bigger question. Yes, insurance is part of that puzzle. But with inflation of this area, houses are going up, the real estate knows that. So when the house goes up in value, Tarrant County Appraisal District loves that. So now they're into you for more money. Insurance is into you for more money. So going back to your bigger question, what happens? I think you end up pricing people out of their home. They end up having to sell here and go somewhere where it's a little bit cheaper.
Yeah.
And that's the hard part, is where is that?
Yeah, there is no place. And you go buy a house in the middle of nowhere, Hill County or whatever, it's still,
Yep.
the prices are elevated.
So it gets to be that, where's the line of, where my job is at, I've got to make a living versus, how much of a commute can I make to get back to my job, but still kind of get somewhere where prices are a little more reasonable, maybe, I don't know.
So to combat being priced out of your house, I know whenever it comes to actuaries, it is mainly data driven, but are there things that you can recommend customers, clients to do to differentiate yourself to the insurance company that the agent can relay it onto them?
Good question, and a little bit, yes. So the major thing right now is not nickel and dime your insurance company. So that goes all the way back. Try your best to prevent claims before they happen. And that can be, you can't do anything about hail, right? I mean, that's just one of those things. But the second major claim that goes on is water damage. So just kind of keep an eye out for, faucets or pipes that are kind of getting to that age. Another big one nobody ever thinks about is the hose between the house and their washing machine. That thing's under pressure 24 hours a day, all year long. They're only rated somewhere, I think, for like 5 or 7 years or something like that. Well, nobody even thinks about that until they move. And that's one of the major things right there, dishwashers. So I was reading some of this last week, and I've never done this, but it makes perfect sense. If you leave the house for a couple of days, or, you're gonna be gone, it takes just seconds to reach behind the washing machine and kick that valve off. Now that hose is not under pressure. Cause it doesn't take much water to be a $15,000, $20,000, $30,000 claim. If you got scraped hardwood floors, way more than that. So a lot of it just is prevention, watching how you drive. You know, but even as far as like windshield damage. Myself personally, if I get a windshield chip, I'm just paying for it. I don't want that on my
Mhm.
on my insurance report. So even though all the commercials say, oh, no cost for this, that's one more claim on your insurance. So when you come to me and I look at that and you've got 2 roadside assistants and you got these hail chips, well, they didn't really pay that much out, but my other carriers are saying there's a lot of activity on this. I
But
think we're gonna pass.
how much of it is an individual decision versus the total of the sum? You know, because you live here and you're surrounded by all these fools that do this, you're now in that pool. And it doesn't matter, almost,
Matter some,
but how much?
Well, I mean, going back, some of the stuff you can't prevent.
Yeah,
And there's nothing you can do about it. And on that, I mean, if it's big enough, yeah, you're gonna claim it. That's what insurance is there for. I'm not saying don't use it,
yeah.
but I'm saying don't use it. We're at a point now where you can't be like, well, I've got insurance, I'm claiming it. And I paid my deductible and, you know, I net $100.
Mm.
That's not worth it. Like, you really gotta see what the claim is, how much it's gonna pay out, what your deductible is. And then kind of make that decision on, is it gonna be worth it in the long run?
It's like all of it. You need to have it, but don't use it.
Yeah, that's
And
right.
it's getting more
Don't you
expensive,
dare.
but don't, yeah, it's
And
getting
if
more
you
expensive,
do-
you're gonna pay more for it, but don't use it, yeah.
It's a racket.
Yes.
Well, and, but to your point, the reason someone would file on windshield damage is the same reason that the insurance costs are going up, because everything's more expensive.
Yeah.
I personally have a crack in my own windshield, and my kids keep asking me when I'm gonna get it replaced, and I'm like, do you know how expensive a windshield is? I'm like, I mean, part of it is just time, we just haven't got to take care of it, but, you know, like, I've been telling my kids, I'm like, back when I was a kid, it was like a couple $100 to replace the windshield, but now everything has sensors in it, and like the rain, well, I mean, anyway, so it's just more expensive to
And you're
do
exactly right.
everything.
And that's the reason, the simplest way I tell people insurance is going up is a case like that. But I say, you know, years ago, if you let your foot off the brake and rolled into somebody at a red light, it's a few $100 for a bumper, no big deal.
Right.
Now you got the cameras and the sensors, and it's gotta be recalibrated and all this stuff, and now that's a $3,000 claim. You're like, I just let off the brake, like, you know, I just rolled into it. Now all this stuff has to happen. Who do you think's paying for that? The insurance company. You know, the mirror on my pickup, I think is somewhere like $2,000 to $2,500, cause it's got sensors and lane assist and all this stuff. It's like, can I just go back to just a chrome thing that I get out and turn and adjust myself and, you know?
No, you can't.
No, you can't.
No, it doesn't exist.
So insurance are trying to, they've got to figure all this stuff out with the actuaries and like, you know, there's no cheap accidents anymore.
No.
So, do you price out very often? I need to come up with an example, I don't know if progressive has it or what have you, but you put it into your car and it's almost validation that you're a safe or good driver. I don't know what they're called, but.
Big brother.
Yes. So they all, pretty much they all have.
It's been in the news recently.
Yes, so they all have their own variety of that.
Turning the data, you know? Yes.
So you can save quite a bit of money if you drive right, you really can. But there was a study came out, I was reading several months ago, maybe back in the fall, that it surveyed people. Okay, Stephanie, how much would you have to save before you put this in your car all the time, watching what you're driving? And then I went to Hamilton, how much would you want to save? And people really wanted it up around like 40%, 50% before they're letting that in their car. 10 to 15% that it can save, that's a lot of money. It really is now with rates, but people are like, nobody's watching me. So
Yeah.
they were
And
figuring out
just think about it for just a minute. You create the pain so you can sell your solution.
Yeah.
Or you want to lower it, okay, we got an idea for you.
Yeah.
Let us watch you and track you
Yeah.
and see where you go and what you
No, I'll put it in my kid's car all day long.
Oh.
safer, right? But
But here's the problem, if they don't turn that off when they get in with you, and I'm not saying which,
Oh.
you know, how your driving is,
Mama, man.
It may affect you.
well, now,
yeah, I'm not saying that.
well, now, well, your kids are in your car, they don't know if the kid's driving or you're driving. So that's part of the issue people were having, like, well, they were just riding with me. Well, you have to turn that out off, I mean, each one of them have their little nuance, right? And so now it's the fact that, okay, I got in the car with mom, I gotta turn my app off and all that stuff.
So it's not like a physical something in the vehicle.
Some of them can be, some of them are on your phone, they're all kind of different.
Put it on my phone.
Um,
Thank you very much.
One interesting one,
Right next to your TikTok app.
Yeah, exactly.
yeah. One of the interesting ones they had, it had it where it only clocked it if you went over 70 miles an hour. Okay, that's fine if you're on 20 or whatever, but you could run 70 down Cooper. Didn't matter, because all it read was the high speed. And it's like, so you could drive on Cooper, Matlock, you know, Broad Street, you don't get dinged for it.
Wow.
And I'm like, that doesn't even make sense. But
That's funny.
yeah, not a lot of people are taking advantage of that, but if, back to your point, if you really wanted to save as much as you could, and you watched your driving, you can save, you know, 10 or 15% on a premium is real money. But it's just that.
I mean, I'll confess, I did it, because it does save. And you know what, at the end of the day, no, I mean, I understand, you know, I mean, my first knee jerk reaction was, no way, I'm not doing that, but then I was like, whoever they is, the Lord talks about, they already know where I'm at. And what I'm doing. But now I have this device
Right,
and any app on it.
That's true.
So
That's true.
that's right.
what am I really giving away that's not already been given away? That's
Yeah.
kind of my thought.
And that's how they want you to feel.
Well,
That's how they want
so
to
they
be.
want me to- but guess what? That's how I feel. Yes. I'm out. But it does save. Because on mine, it actually charges me the normal amount or whatever, and then it comes back and gives me like a break after a month or something, you know, because it looks at how
Well, that's
many times
actually,
it stops.
that's a clever way for the company to give you the credit, like, oh, look, here's your reward, right? Like, rather than just charging you the lower premium and then charging.
Yeah, 'cause you'll
more.
forget.
Yeah, so,
You take it for granted.
yeah, so to give you that.
Yeah.
Psychologically, the
Yeah.
pricing model is
That's right.
working for
It is
them.
clever, yeah. You got it right.
Well, now there's an angle. Turn this into a marketing moment. There's an angle there that you crossing. You know, it does work on people. It works on you, you know, yeah, yeah.
For sure. it does.
Any health insurance advisors in the chamber?
No, and I mean, that's, you can't even, like, I would love to find somebody, there's not even anybody that I know locally that does health insurance.
I bet Lee or I could find one of the tens of thousands of NAR people that are constantly
I know.
texting
I
us.
was gonna
Would
say,
you like a health insurance quote? Would you like it?
Every
Like,
day.
we get asked every day, 6 times a day,
Really?
we would like a health insurance quote.
yeah,
Hmm.
but I don't know where they're located. They may be.
Well, I have a reason for that. I mean, that's the people that I'm around, so if you ever looking for that, I have some people.
Yeah, the only thing I've ever used is that, like, is it insurance? You use it online and it's all your major health insurance companies and you fill out a little deal and then they give you different programs that you can choose from. And I've used it twice. To switch, but I haven't used it recently. But you do that and you end up opening the floodgate to all the yahoos who want to call and drive you crazy.
Yeah, we've never filled anything out together. That's just like the
Yeah.
National Association of Realtors sells that
Yeah.
list.
Yeah.
They
Names
sell
and
it.
phone numbers.
And even though keep hitting stop.
They
I
take
don't know if they're ignoring it or if it's just, I don't know.
Well, they saw how good your driving record was.
Welcome back to that. I've really shot myself.
No, I'm intrigued.
I just think I would like to have somebody in health
Yeah.
insurance that would, because, I mean, being privately insured, I
No,
think,
I am too. It's expensive. I pay $800 a month for me.
I'm not gonna tell you how much.
For me.
Yeah, it's over, if you wanna insure a family of
Oh,
four,
yeah.
it's over $2,000
Yeah.
a month for
Yeah.
most carriers, so, you know. I will confess, because Lee confessed to what he has in his vehicle or whatever, I will confess, yeah, I will confess, we moved to one of the Christian health share organizations because private health insurance was so expensive, so we thought we would experiment with it and pray that we don't get bankrupted by some health emergency.
Yeah.
So far, it's worked out pretty well for us, but I don't know, like that catastrophic event could come.
Yeah, I've
That,
heard stories where, oh, that's not covered. And they were like, what? People that we all know.
yeah, so I think it would be interesting to know, we've done a fair amount of research on it. But the reason we ended up there
Yeah.
is because my husband sat down and did all the research trying to get us a better premium, and we were just paying out the wazoo for health insurance that didn't get us anything. I mean,
Yeah.
high deductible, the coverage was so poor. I mean, it's like, what are we paying for? You know, and then the other piece of it, I think that really frustrated him when he sat down to do it is he went into the marketplace on, I guess, affordable, whatever.
Care.
Yeah. So he went into the government thing, like,
Yeah.
and the first question I asked was, what's your income?
Yeah.
So, you know, I don't know how many people are telling the truth on that, but he's a pretty honest guy. So I'm pretty sure that, you know, our premium would be different had he put a different number in or the quotes that we were getting, you know what I mean? So it seems like another, almost another form of taxation to a certain extent, like
Yeah.
by the higher your income is, the higher premiums you're quoted, it seems, from what we could tell. So I don't know, the whole, I think I come across people all the time who work for large corporations and they have these great health benefits.
Yeah.
And they have no idea.
Yeah.
And that is part of their, that's
Uh-huh.
essentially part of their income. They have no idea
That's
what those
exactly
of
right.
us are paying outside of that. Like, yeah, it might look like I make a lot of money or, I mean, but like, you're not looking at the expenses it takes to be self-employed because, you know what I mean? Like,
Yeah.
so it's,
I went to lunch with the Transwestern guys on the commercial side of
Uh-huh.
real estate, and he has family of five, I have a family of three, but, he's paying 5 times what I'm paying. And, you know, we have netted healthcare and really good coverage and all that stuff. I'm W-2 for a large corporation, he's 1099 for Transwestern, so it makes a huge difference,
and he's paying, what'd you say?
5 times what I'm,
5 times what you're paying. And I bet his benefits aren't as good.
I would imagine so.
Well, see, and we've even tried, there was a collective group of chambers in, the north part of Texas. So it wasn't just DFW, it was the north central part of Texas, to create an association so that we could get health insurance. And we got nixed on that by the government because they wouldn't recognize us as an association. But that would have been a huge benefit for small business to be able to have a health insurance plan. Because again, the racket on that is the more people you have,
Yeah.
you know, exactly. And because most of what kills any health insurance plan, even when I look, it depends upon the makeup of who's in your group. If you got a lot of people older than X age, you're gonna pay them. Just because of the chance, or if you've got a lot, you know, there's just how they put it all together. And so the broader base of group that you've got, the better your benefits are gonna be. So the smaller the company, they start looking at the mix of the age, male or female, children, all of that. and it impacts it.
Mhm. Yeah, it's.
Yeah.
I have a lot more thoughts and opinions that I'm gonna keep to myself, because it'll get ugly in a minute.
You don't want. Yeah, so insurance is so fun.
And on that note, thank you for joining us on.
Part of life.
Or not.
Those are those adult problems,
Yeah.
you know,
Yes,
just
No
is.
kidding.
It's what it is, peoples.
well, I mean, to your point, we have to have it,
Yeah, yeah.
you know, but, I mean, I don't know, going back to last month's conversation of
Mhm.
like, how do people find themselves with $100,000 in credit card debt or
Yeah.
whatever? Well, I mean, you
Life's
could,
expensive.
Yeah.
I mean,
That's how.
but go uninsured.
Yeah.
Like, it's just, you know, I could either carry all that,
Yeah.
I'm not telling people go uninsured, please, don't mishear that, but I'm just saying, like, it's another one of the risks you take, like, I can just keep swiping my card, keep swiping my card for everything I want. I can choose to not carry certain types of insurance, I can choose, like, it's adulting and life choices, and, you know, some people sleep better at night than
Well, and
others.
the interesting thing is
Decisions
that as
made,
we look at it, you can, every conversation, whether it's real estate insurance or finance, everything is so connected. It's all- Right? And it's all tied into the economy.
Mhm.
So.
I started to say that with the health
Yeah.
insurance, because health insurance is expensive.
Mhm.
Probably for multiple reasons, but one reason definitely is the cost of healthcare is
Yeah.
expensive. And the reason that healthcare gets so expensive is because, I mean, it too is a little bit of a racket because, you
Because
know,
college tuition is now skyrocketed
Oh,
and so
yeah.
if we're talking paying for 8 to 12 years of something at that cost, that has to be expensive in order to make it worthwhile.
yeah, and a lot of the health, a lot of the healthcare, like hospitals, even retirement centers some of them are going bankrupt or some of them are near bankruptcy. A lot of them have been purchased by like the private equity funds, and those guys have basically cashed out on them.
Those are the
So
ones that are cleaning up right now.
they're right.
They're major investors like BlackRock and the ones,
Institutional investors.
yeah,
Exactly.
in the real estate market.
Well, I mean, we've had a few, healthcare things over the last couple of years, and I mean, you talk about the cost of health insurance and that in itself being kind of a racket. I mean, the first bill we got from the hospital after John had his gallbladder removed, I'm sure he wants me telling the whole world that story, but 30 days later, we got another bill, and it was half of what the first bill was. Never made a call, never, because if you don't pay it immediately, they just and granted, because we're on that Christian health share, we're considered not insured or whatever, so like, the first bill they send you, they never expect you to pay that.
Mm.
They expect the health insurance companies to pay that.
Mhm.
I experienced something totally different, in this last week. So Davis came in October. We got a bill 2.5 months later, for the delivery. And we paid it, the amount that was set. We got a bill this last week from the same provider for like $1,800 additional from what they'd already said, had already settled.
See, we get some more.
I'm not
And
kidding.
this is just your portion, right? Because you said you have insurance too, so you're.
Insurance, and life insurance, I want to talk to somebody because I just don't get it. And I'm sorry, health insurance, I want to talk to somebody because it just makes absolutely no sense.
Yeah.
All
Yep.
Mandarin to me.
Mhm.
House cards.
Health cards.
Well, and yeah, because your insurance premiums go up, the cost of housing goes up, the taxes go up, like it's all.
It is, it's all connected. It's all economically driven.
Yeah.
Everything is.
It's weird because it's almost like, and that's why, because there's a lever. And whatever that lever is, there's somebody that can pull it, and then it just,
As we're talking, The number one best health plan for realtors is a group health from United Healthcare. Sorry to interrupt you, but I just
Oh my
want, just to bring it on. If you get the same reason.
Forward, it's Stephanie's.
I'm sorry, go ahead.
But what I was gonna say is that it is, you know, I keep saying vague, but really, guys, think about it. When you have the ability to touch and do things that have a trickle
Ripple.
down or a ripple effect within an economy and how it affects everything, yeah, it's like, and then to think that you're gonna do one thing over here in this little bitty tiny section of the whole universe that's gonna make a difference, not, you have to go back to where's the starting point? Where is that?
Well, it's why so many people, to that point, it's why so many people just pay it or do it, or
Yeah.
put the thing in their car or whatever.
Yeah, because
Me, I'm this one person,
Yeah.
there's no way I can make a
Yeah.
difference, that I can't pull that lever. I can't change the cost of health insurance, I
Yeah.
can't, like, what, I mean, what are we gonna do
Yeah,
besides sit here and talk about it?
exactly.
Write about it, you know?
Toby, would you like to bring it home for us?
It's all been said, so. You gotta have it, unfortunately, I mean, you.
So suck it up.
Yes. And there's always that option of, I mean, you said it earlier on a lot of stuff, you can absolutely self-insure it,
Mhm.
but you take that roll of the dice. And, you know, I think a lot of it's gonna be getting to a bigger issue. You brought it up earlier about credit cards and this and that if you have a choice of paying for insurance or putting food on the table,
Yep,
Yeah.
which one are you gonna choose? So that also leads into everything's a ripple effect, right? So if you've got, you know,
there's the power. We opt out. Well, that ripples up, does it not? It's
So
sad.
I mean, it's actually.
We're all playing the game.
It's a little actually surprising, maybe a little disturbing, that the number of people, because I work in an industry where I'm self-employed, and so I know a lot of people who are 1099 and business owners and whatever. The number of people I know who do not have health insurance
Yeah.
is staggering.
Yeah.
If you really think, I mean, if you really think about the number of people out there who don't work for a large corporation that can get those types of benefits. So, and maybe that in itself is why healthcare is so expensive, because there's so many people who aren't insured, so
Yeah.
bills aren't getting paid and whatever. I mean, they've got to collect from somewhere. I don't know. I
Yeah.
think the whole thing's a racket, but health insurance, I think, is one of the first things that people drop
Yeah,
Because you
when
can't,
because you
Yeah.
can't.
unlike, I mean, think about, you've said this before, how many people are out there right now driving around that are either under or uninsured?
Uninsured.
How many, what's the
biggest
percentage?
majority of it. If you go underinsured and no insurance at all, it's probably gonna linger up around 60%.
Mhm.
Okay, what about just non-insured at all?
Non-insured at all, I haven't seen the figure recently, but I'm willing to bet it's around 25%.
So think about that, on a car where you legally are mandated, you have to have it, you could get a ticket or whatever, if you don't have it, you get caught.
and how many?
And how many people are out there without it? Now go to health insurance where it's not legally mandated, there's no
Yeah.
one pushing you to do it, so of course people are not gonna do
That's
it.
exactly right.
Wow.
And going to that ripple effect though, so if that's the case, so 1 in every 4 people you're driving by on Cooper Street on a daily, I mean, just look at the red light when you're stopped, look around and go, "Hey, how many people
All
here
these people,
don't have?" So if they run into you and you step out and they're like, "Man, I'm sorry, I don't have it. I don't have insurance."
Yeah, but
Now,
I'm not gonna claim it on mine for uninsured motorists, because my policy's gonna go up, or I'm gonna get dropped,
depending on.
right? Like, I mean,
Yeah.
that's the thing, is you're telling us, and, I mean, I know you're not telling us not to file, but
Yeah.
if you're looking at the cost of the claim, like, so I was the responsible one, had the insurance, the guy
And
who
then
hit me didn't, and now I can't even use the uninsured motorist coverage that I have, because it's gonna end up putting me in a position where I could get dropped or have a higher policy amount.
Right.
Well, that was a really good way to like bring
End
it
it
up.
up.
You're welcome. I did. You led me there.
All right, so we'll end this session. And I think, what are we doing next?
Real estate.
Doing real
We
estate.
finance last time.
Okay.
Unless you just want to skip us. and-
No, you're gonna do real estate. We'll do real estate next month. All right. Sounds good.